All right, welcome to the show. This is Diamonds in the Rough. My name is David Flores. I'm a commercial real estate investor based in Houston. I've been in the business 20 years and done 2 billion in transactions during that time. Today, our esteemed guest is Roy Salsinha. Roy, give us a quick background on yourself and what you do, what your role is in commercial real estate.
Thanks for having me, David. My name is Roy Salsinha. I own a company called Carmo Companies. We're based out of New York, but now based out of Astoria, Queens, in my house. But typically, we're in downtown Manhattan. We work and we put together private equity real estate conferences where we introduce institutional investors and family offices, both to direct and indirect real estate investment opportunities and fund managers or on a project level. And the way we do that is we put together these conferences, which were in-person conferences, but now are digital conferences where we basically act as a bridge to interact the LP and the GP side. We do these events attracting capital from all over the world to United States private equity real estate investment vehicles.
Yeah, appreciate that intro, Roy. You've built an amazing company in a real short amount of time. You're a global brand in a real short time frame. So congratulations on what you've done to build your company. Give us a little bit of a history on how you got into commercial real estate.
So how I got into it, really fluent in Portuguese, family's from Portugal. I was looking for Portuguese-speaking jobs after I got out of college and found a company that was based out of New York organizing these types of conferences in Brazil to start. Brazil turned into Mexico, turned into Colombia, Peru, Chile, Panama. And basically at the time we were introducing institutional capital down to the region and to local real estate fund managers and developers within all of these countries. But over time, I established a network of Latin American family office and institutional investors and noticed that there was an opportunity and an interest for deploying capital within the United States real estate. And so I decided to create a conference platform designed at introducing these specific limited partners from Latin America to US-based groups. And I've been doing it for the last 4 years now. And that's how it started.
That's great, man. You've built an amazing company. So congratulations on how you got to where you are now. Based on what you're seeing out there in the commercial real estate, especially on the fundraising side, considering where we are in world history, what are you seeing out there right now?
I'm constantly talking with a number of different fund managers and developers. What I'm seeing is there is a demand on the LP side for healthcare related real estate, whether that's medical office or anything related to specialty healthcare, related real estate within the United States. I think that's something that's demand's going to increase, and people are always going to need that. Even though there is telehealth, they'll actually complement each other. One is not going to replace another. You still need to go to a doctor. So that's one theme. I think housing, senior housing. I've seen a deal get done already in this coronavirus environment. And I think there's groups looking at distressed investment opportunities in debt. A lot of people are in debt plays right now and looking at debt sort of investments. I think real estate might take a little bit longer to show some of the distress, depending on how long this whole lockdown lasts and how long people are unemployed. But for now, that's what I've seen. I do see some deals getting done. I think people are just getting used to the whole new reality we're living in, and we're going to see what happens from here. But I have seen some deals so far.
Great. Well, that's good news. There isn't a lot of good news out there in the news media, so glad to hear that from you this afternoon. So based on kind of your perch there in New York, where do you think we might be in a year from a fundraising perspective, and where and how this commercial real estate investment field might look like then?
This is, although I organize these events and I deal with, experts within the space of private equity real estate, these guys are really Harvard bred, Cornell, and really the cream of the crop that I deal with. So I do have the value of speaking and learning from them, but also just a common sense sort of perspective. I live in Astoria, Queens. It's a very concentrated area. I take a subway to go to work downtown. I'm starting to question whether I want to do that. I'm starting to question, as having an office down there with a small team of 5 to 6 people, do I really need an office? So I think things that are going to get really hit is going to be office. Once my lease is up, I'm not going to go back. If anything, I'm getting more work out of my employees working at home in longer hours. We cut that commute, and we're all doing the same amount of work. And travel will still be necessary for certain moments, but there are things that will be replaced. Small, meetings, face-to-face meetings that happen through platforms like Zoom, right? So I see that office is definitely going to be hurt. For sure, co-working is going to be hurt. I mean, working from your own home is just as co-working. I think that we have those short leases which was an advantage for the whole co-working, and going month to month is going to be a big disadvantage. And what else? On the residential side, I'm living in an apartment now in a very concentrated area. I think I might want to go more to a more residential area. We'll have more space, my own backyard, a socially distant environment, right? If this is going to continue, there's no guarantee when a vaccine is going to happen, if a vaccine even happens. So I just desire some more space. I don't know if I want to live on top of each other. So I think that this is only going to intensify people moving out of cities and into more suburban areas, and the migration and the story of many of these multifamily focused developers and acquisition specialists of investing within secondary cities within Southeast U.S. and Texas, like your strategy is. I think it's only going to get better. More people are going to want to move to Texas. More people are going to want to move to Atlanta, North Carolina, and places like that. Cost of living is cheaper, especially now. Anyone that's in residential development, luxury, you can't even use the amenities that you're paying for. I can't go to the gym. I can't go to the pool. What am I paying for all of this? Plus, I just got my salary cut, or I just lost my job. I can't afford this anymore. I'm going to go into workforce housing. So that's I think I think the strategy is a safe strategy targeting a residential. You want to own a property where everyone's an essential worker inside of your building, right? A cop, a teacher, someone like that's going to be able to pay your rent. And so it's a really good strategy. I really think multifamily is going to stay, and that's where you want to be. And if anything, perhaps there's going to be a dip, but you could invest in the right real estate. And if there is long-term inflation, real estate's going to hold its value. Other things, I really haven't paid attention to self-storage, but people have been telling me that it's really relatively not affected too much. I guess we'll see. One strategy that's actually doing really well, I know an investor, it's a group of 4 investors that they're the largest owners of Dollar General stores in the country. They own about 330 Dollar General stores across the country, and these are outperforming. Dollar General stores are doing incredibly well. Part of me makes me think. I mean, Dollar Generals have just been going. They haven't closed throughout this whole lockdown, right? Same thing with Walmart and all of that, but not that I know of. And I live next to a Dollar General store here, and then I live there. I see another 99-cent store here, and that one's closed. So maybe I don't know how that kind of happens, but so that's a really good asset class. There is some essential retail, but if you have other components like mom and pop shops there, I don't think that's good. So things to stay away from is office and retail. Things that are essential, like medical services, multifamily. People still need places to live at the end of the day. That's where you should stick to, and industrial might be a little overpriced, but logistics centers. It just depends on the type of asset And I've heard that data centers, obviously data centers have been amazing with Zoom and all this data, but data centers are easily replicated, right? You could just build a box anywhere to put, energy. So I'm not sure how, having increases in rents within data centers, if it's going to be highly competitive being in the space. So or if you can move, so that's one thing I don't know about, but I think it's rather safe if you're in data centers right now and Zoom is one of your clients. So I think behavior will change. The world has changed in a very short period of time, and with that, I think real estate and demand for real estate will change in some fashion.
Great. Roy, thanks so much for coming on the show and giving us your perspective from your perch on the fundraising side globally and here in the U.S. So thanks so much for being on the show. And the way I always end the show is this, Roy, it's a rough world out there in commercial real estate, but Roy, I just want to let you know that you are a diamond in the rough.
Thanks, brother.
Have a good
Thanks
day.
for having me. Take care.